So welcome everyone to the weekly market analysis. First thing obviously I want to mention is that we did have a contract update. So when I'm looking at higher time frame charts using ESU is kind of less than ideal because you can't see very far back. So when I use high time frame charts, it's always going to be ES1 exclamation, which is kind of uses all the price history data, and then if you do BD adjust, it adjusts for contract pricing. Cool. So daily chart, not much here as you've just been ripping up. So coming into the 4-hour, we see that on ES and NQ, we are in this 4-hour fair value gap. As long as this order block holds on the 4-hour chart, high time frame bias should be bullish, right? There's a good chance we may come down short term into this order block and so forth. However, as long as this holds, it's going to be difficult to flip your bias, bearish. If we do get a close underneath this order block, first, targets are going to be some sell side liquidity here. We have these lows here, right? So you can easily see a push down into this sell side liquidity down here. And then looking at NQ, this is your next target. And then continuing on, mostly looking into ES, there's going to be a decent chance that we see a push. Let's go to the daily chart really quick. Into this, let's just turn off the opening gaps for now. So I would definitely say there's a decent shot in us coming down into this equal lows down here. And then from this here, depending on price action and kind of structure, if we do reach this levels down here, there's even a chance that we come into this sell side liquidity down here. Now let's talk about kind of the reasons as to why we've been ripping so much these last couple. From a technical standpoint, obviously there's going to be fundamentals involved, but from the technical standpoint, we have this weekly sell side or buy side liquidity up here that looks to have been the target, right? And then additionally on ES, we have this weekly, fair value gap, right? That is now starting to see a wick off. So coming into next week, it's gonna be really interesting to see if this thing holds, right? If this weekly FVG holds and we start to come down to this underneath this order block here, you can definitely see a kind of a switch into bearish bias on the daily higher time frame charts. Same thing with NQ. A little different here, right? So we have this buy side liquidity up here on NQ because we have these equal relative highs up here. So it's going to be really interesting to see how this plays out. As long as we stay above this order block here and we don't flush underneath it, I'm gonna continue with the high time frame bias that we're bullish until we at least get to this buy side liquidity and on NQ, right? I'm obviously personally more biased towards the ES chart over the NQ chart. I just find that it holds more strength kind of when trading, when you have kind of mixed confluences. I'm going to usually tend to lean on the side of ES more than NQ. Just for the technical standpoint, it just seems to be a little more clean in my point of view. These are all valid entries, right? We have internal liquidity gets swept here. And then after that, we have this market structure shift to the upside, right? And then we have our first entry of the day, from my point of view, long position on the 5-minute chart right here. I'm just going to stick to the 5-minute chart just for this analysis, just because it's a little easier than going in the 1-minute chart for doing all these different trades. And then first target can be a 5-handle move to this buy side liquidity. And then second target, obviously, is this liquidity up here. Third target, liquidity all the way up here for 12 points. And then you can even attempt to stack your entries off of this 5-minute FVG here. But all in all, sell side sweep in the AM session, pushes up, gets the market structure shift, entry off the 5-minute FVG, stop underneath this order block right here, right? 5-minute bullish order block. This should hold. If it doesn't hold, then you should be getting stopped out anyways. You know, obviously there's this FVG here, but like this entry is not necessarily going to be something I'd be taking. It might be something I would look into like on a 5-minute chart or on a 1-minute chart. So if I draw my 5-minute FVG there, then when you come in on the 1-minute chart, and then you can try to take an entry once it begins to hold, you know, like in this 1-minute FVG, you can then take an attempted entry here. I never recommend just blindly longing these old FVGs, especially after a major uptrend. If you just come in and try to long every 5-minute FVG just because we're in an uptrend, it's not going to work out for you because we've already taken major liquidity down here that you're going to need to see that 5-minute FVG hold and then look for a continuation setup after that. So like here you see 5-minute FVG holds, now you take the 1-minute FVG long. Or even the better entry here would be trying to long this order block after we get the continuation up here. 5-minute FVG holds, 1-minute FVG holds. We come back down, retest this 1-minute order block, and then you have the push to the upside. Kind of the basis behind this trade was just the fact that we have a verge of buy side here. And then also, if you look on the 15-minute chart, we had a breaker candle. So obviously this is an order block for a bullish order block, make high, another higher high, and then it fails to the downside, right? And once this thing fails, it becomes that bearish breaker candle, right? So let's bearish breaker up in the 1-minute chart now. And from here, you're going to be able to really clearly see why this 1-minute order block here was such a nice entry. You saw on the 50-minute chart, while these candles closed above on the 1-minute chart, they never actually closed above on the 50-minute chart. So because it's a 50-minute bearish order block, I'm looking at that 50-minute chart to give me confidence that these wicks are closing kind of underneath that breaker. And then here, when we get this flush down, and we retrace back up, I can put my fibs in and see that's coming in a premium of this range. And then from this premium of this range, I see this nice 1-minute order block, nice big body candle, can take this really low risk short position right at that breaker candle, or at that order block candle. Put stops just above the mean threshold of the order block, and then just take the target down for PT1 to the bottom of this, and then PT2 for 13 points at the bottom of this low here. So that was a really nice scalp trade there at the end of the day.